JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 16th of March 2021. So yep, welcome everyone. Welcome to this Tuesday's morning session where I'm going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to visit us here on jfdbank.com. And click on the research tab right there on the top, guys. So first of all, before we kind of jump into the charts, I just wanted to quickly apologize if there will be any technical glitches or maybe delays, or maybe the quality is not going to be very well. Unfortunately, I'm forced to run these videos again, not from my usual location. So yep, guys, so I would just wanted to kind of quickly say I'm sorry if there will be any, like I said, technical problems, or let's say quality problems. So yeah, hopefully we can get back to normal very soon. But yeah, for now it is how it is, unfortunately. So jumping into the charts, the first one I want to pick up here is the Shanghai Composite. Now the index, we can see reversed higher, and this is what I talked about yesterday. Yesterday I said that yes, we had a nice drift lower here. The index pushed nicely here to the downside, remained below this downside line taken from the high of the 18th of February. But this morning you can see that it is trying to climb back. I mean, it closed today already, and it closed in positive territory. But still kind of remained, let's say, I would say slightly below, or maybe even bang on this downside line, but below my levels, the ones that I've mentioned here. Now, with the ones that I've mentioned here, which I need in order to consider the upside. So a break of these levels is required. Breaks of these levels are required. But again, for now, we're not really getting that. We also saw the index kind of staying below the 100-day EMA, and that's why I'm going to be very careful here. Now, of course, don't get me wrong. I mean, looking at this, just this little technical picture on its own, let's say forget about the downside line here, we could be seeing a possible bullish flag here. But again, even so, we would still need to see a break of the area here near the 3,460 territory, somewhere around here, approximately in between these levels, but roughly we can round it up towards that 3,460 territory. So a nice good pop above it may open the door towards higher levels, and then we could aim for that 21-day EMA, or even slightly even higher levels. But again, for now, it is how it is. Yeah, let's see how all this is going to play out in relation to this downside line. If this downside line continues to provide resistance, then yep, another slide here could be possible. However, if you remember yesterday, I said that for me, still the more comfortable level after a break of which I could aim for the downside would come here, this 3,325 zone marked near the lows of the 11th of December and the current lowest point of March. Oh, and this one is, by the way, also the lowest point of December. So very strong area of support. But if that gets broken, of course, this is where the price would be already placed below the 200-day EMA, and yep, a break below this level would confirm a forthcoming lower low. S&P 500. So yesterday the index managed to create a new all-time high. It pushed higher, as you can see here. Good news for the buyers. We clear this barrier, the 3,960 zone, and yep, we've hit the area around. Let me just we'll shift this a little bit. We hit the area around the 3,970 territory. So, of course, a lot of talks right now are happening around the idea of a potential test of the psychological 4,000 mark. Well, to be honest, I mean, everything's possible still. We can see that the cash index is pushing higher right now. Again, don't get me wrong, it's just the early morning still, but it's currently, yes, pushing higher. It's trading slightly, just fractionally above that 3,971, 70 territory. So yep, in a way, the psychological 4,000 territory is becoming very, very attractive. Now, I'm not saying that we will definitely reach that, but certainly there is a very good chance of doing that right now. Now, for the downside, let me just reuse this arrow here very quickly for the downside. What I need here is a drop somewhere below this area right here, the highest point of February near the 3,950 territory. So a nice good move below this may kind of invite a few more sellers into the game here, and we could see a bit of a corrective move here towards this downside line taken from the high of the 16th of February, or this 21-day EMA, or basically there are a bunch of other good levels to consider. However, for now, I'm just gonna keep that scenario as my secondary scenario. My main scenario for now is for the upside, guys. But again, like I said, if it suddenly starts falling below the 3,950 territory, then we will have to maybe consider a bit of a corrective move here lower. The German index, DAX, and yesterday, this is what I talked about, guys. And yesterday, I was aiming for this 23.6% retracement on the Fibonacci, which we've managed to reach perfectly. So that's great news. So that's, let's say, done and dusted. But let's see what we can do now. The cash index is currently trading at around 14,518 zones. So basically, it's above yesterday's close. So it's sitting somewhere around here, basically. Again, if you want to go for some higher levels, we'll wait for that push probably through the current all-time high near the 14,595, just to be a little bit more on the safe side, because again, this could just maybe even move sideways here for a while until it kind of gets some sort of a good catalyst to kind of go higher. But again, let's be let's be careful here with this. If this decides to correct lower here, well, you could of course keep an eye on this 23.6% retracement on the Fibonacci if we draw it from the low of the 26th of February. Now, again, guys, I mean, you need to remember that this is all a little bit tentative, so, and kind of subjective, because depending on how you're going to draw it, I mean, the Fibonacci, don't focus on it too much. It's just kind of an extra tool that could help you out here. I mean, yes, certainly it does work out sometimes in very well in certain with certain levels, but again, because in this particular scenario here we have the Fibonacci here is very, let's say, we can start drawing it from different levels here. So I mean, we can also take it from this area, the lowest point of January. So there are a bunch of good areas, of course, but again, let's keep it simple for now. Basically, long story short, yes, I'm gonna consider maybe another test of this 23.6% retracement on the Fibonacci, but only drawn from this level, the low of the 26th of February. Let's see, just for out of curiosity, if this is going to actually work out or not. But again, the moment, I would say, because the index is kind of pushing, or should I say, trying to push up again, my focus will be mainly on this 14,595 territory. If that gets broken, this will confirm a forthcoming higher high and, of course, a new all-time high. So yeah, keep that in mind. But if it suddenly starts reversing lower, I will keep an eye on this 23.6% retracement. That could be my target, but I'm not really saying that from here the index, let's say, could rebound and push higher. It could still continue drifting lower. So if of course, the momentum, the downside momentum, will be on the stronger side. But for now, I mean, we can see that the momentum is actually to the upside a little bit. Yes, we are losing a little bit of the upside speed, but we're still in positive territories here. So yeah, let's see how this is going to play out with the 14,595 territory. If it continues somehow to provide resistance, then maybe we'll consider a bit of a corrective move here lower. Now jumping into DXY, the dollar index, so continues to slowly grind higher, I would say, moving further away from the 100-day EMA here. And yesterday I mentioned this little barrier right here, the 91.96. This one is for the for the impatient ones. However, still my preferred breakout area for the upside would be from around here, the 92.50 zone, because this is the current highest point of March, and a nice good pop above it may open the door, yes, towards slightly higher levels. The only problem here, of course, is, or I should say, are the 200-day EMA here and this downside line taken from the high of the 25th of September. But if those two get cleared, well, I mean, this is where it could become very interesting for more buyers. However, that's of course in terms of the upside. But if, let's say, this area somehow continues to provide resistance, this 91.96 zone, then maybe a bit of a slide here could be possible again. However, as I mentioned to you previously, the preferred area for the downside could come here on a drop below the 91.05 territory right here, because at the same time the price would be placed below all of its EMAs as well. So because currently, as we can see, that the EMAs are doing their job and they're kind of in various occasions, they are the EMAs here are acting as nice areas of support and or resistance. Gold, I'm still sticking to the downside. The idea here was that as long as the price stays below the 1740 zone, roughly around here, or this downside line taken from the high of the 6th of January, then there is a good chance for this one to drift back down, maybe even test this long-term upside support line drawn from the low of the 20th of May of 2019. But of course, for now, guys, I mean, it's a very tricky situation here. I would say, I mean, yes, we are near this area, near this downside line. So of course, the more touches we have of let's say a certain trend line, the more kind of chances there are to break it eventually. But yeah, for now, you can see that this 1740 territory is also kind of providing, let's say, good resistance. So in other words, if all this area here continues to do that, continues to provide resistance, then of course another slide here could be possible. If this downside line gets broken and we see a push above the 1760 zone, then yes, we will go for a bit of a larger correction to the upside, because don't forget that we're still below another downside line here, this medium-term downside resistance line taken from the high of the 7th of August. Jumping into the Brent oil, so this one is drifting a little bit to the downside. However, I wouldn't say that this is something huge here. I mean, that we're seeing a huge correction or anything. No, of course, yes, we are seeing a correction, but this is where it's interesting because so far, this commodity is kind of quietly drifting back down towards the 21-day EMA. And basically, yesterday I've mentioned to you that that this little area right here, this 66.53 or even the 66 territory right here could be the one to watch in order to consider the downside. So but as you can see now, why? Because we also have the 21-day EMA approaching this area. So in a way, let's assume this is going to drift lower. Probably by the time it could drift lower, this 21-day EMA would probably be somewhere around here, and we would get another test of this area, this whole zone here. We could probably see the price stalling for a little bit, and then if that eventually surrenders, this support area surrenders, this could lead to a bit of a larger correction to the downside. And of course, also in this situation, what we would have ourselves potentially, again, I'm getting a little bit ahead of myself here, but we could be seeing maybe a nice descending triangle here. So let's say if it drifts lower here, tests this whole 66 territory together with the 21-day EMA, it provides, for example, support. We could see a nice rebound, maybe then another test of this downside line, and basically all this, like I said, could end up being a nice descending triangle, which of course, according to all the TA rules, tends to break to the downside. But again, let's not get ahead of ourselves for now. Let's see if we can reach this area together with the 21-day EMA. Bitcoin, so drifting lower, falling below. This is what I talked about yesterday. It fell back below the 58,321 zone and stayed below it, and it continued to slide, and yep, it came very close to testing this upside support line drawn from the low of the 28th of February. So, but to be honest, we'll take that because it almost did test that together with the 21-day EMA, and you can see it rebounded. Now the big question here is, can it rebound and make its way back above the 58,321 zone? But I'm going to keep this area for now on my radar because if it travels back above it, then yes, we could slowly aim for the upside again. However, guys, if it struggles to get back above the above this 58,321 zone, then yes, of course, there could be an indication that maybe not everything is that well here, and maybe we could be ready for a bit of a corrective move lower. However, for me to examine that idea, I need that drop below this this area right here, this upside line, and the 21-day EMA, of course. Now jumping into a few pairs, and by the way, in terms of the economic calendar today, so we did get the RBA meeting minutes today, so you can check those out. Also, we are having today the German ZEV economic sentiment figure together with the ZEV economic conditions. Now that's going to be very interesting to see, especially for the euro dollar traders. And the another thing for you to keep an eye on here today are the core retail, in general, retail sales figures from the US. So those are currently expected to to decline, to be honest. So, and to be honest, quite drastically. So far, the forecasts are showing that from a kind of a good positive figure, which was seen previously, the numbers are expected to go down and go back into negative territories. If so, then maybe if it falls even below these initial forecasts, then of course this could weigh in on the U.S. equities. And maybe here with AUD/JPY, for example, because this pair is sometimes seen as a risk monitor pair, and kind of the environment could turn into a risk off one, and yep, we could see AUD/JPY drifting lower. So that's why, for example, my downside scenario could come on a break of this upside line, and then yes, lower levels could be met. But for the upside, I'm waiting for that push above the highest point of February, near the 84.95 zone right here, and then kind of I would go for some higher levels. USD/JPY. So here the situation is difficult a little bit for the buyers. We can see that the pair is struggling with this 109.23 zone. Yesterday we did get an overshoot, but we didn't really get the daily candle to stay above it. Today we're seeing another test of this area, but again struggling. The bulls are kind of struggling to keep the pair above this area, above this the high of the 9th of March here. But again, let's wait and see. If we do eventually see a stronger move above this area, and we do see that daily candle staying above it, then of course my next target is the 109.85 zone. And that's the highest point of June of 2020. For the downside, to consider a larger correction to the downside, I need to see a drop somewhere below the 108.34 zone initially, and then yes, lower levels could be met. GBP CAD very quickly on this one, and yeah, this one continues to slide. And let me just remove all the drawings here. This has been a while ago that I've looked at this pair, but we can see that the pair is drifting lower and it's falling now below the 200-day EMA here, and of course all this is not really painting a very positive picture here for the near term. We can see that the pair is now trading below this downside line taken from the high of the 24th of February as well. And if by any chance the pair somehow climbs back above this 200-day EMA here shown as the black line, then maybe we could consider a little correction here to the upside. However, if the downside line once again provides resistance, then something like this could be possible. So again, that's in the scenario if this daily candle eventually ends up staying today above the 200-day EMA. If it doesn't, then all eyes are going to be on this little hurdle right here, the low of the 20th of January here near the 1.72 mark, and then we will take it from there, because that's going to be my next target. Slightly below it we do have this little area right here as well, the lowest point of January near the 1.7176. Euro GBP very quickly on this. So the pair continues to push higher. So beautiful break here of this downside line, very quietly, of course. And now we're also breaking this 0.8596 territory. I spoke about this level yesterday, if you remember. The idea was that if we get a strong move above it, then yes, this increases the chances for a move higher here. And my next target right now, of course, is this 21-day EMA, because I want to see how this is going to perform around this this EMA here. But if we clear that, then my next target is the 23.6% retracement on the Fibonacci here, roughly around that 0.87 mark, and then we'll take it from there. And finally, EURUSD. So the pair remains below this 1.1952 territory. I spoke about this yesterday, and I said that as long if, for example, it stays here below this area, then there's a chance for this one to drift further south. However, it's a little bit on the tricky side right now, I would say. I mean, it could easily reverse back to the upside here if the dollar starts weakening, and yeah, we could travel back up. So what I'm going to say here for now is probably that still for the upside, I'm looking at this 1.2023 zone in order to kind of, let's say, get a little bit more excited with the upside, because at the same time the rate would be placed above all of the EMAs. You could also, if you want to, of course, but that's a little bit more tricky, I would say, keep an eye on this 1.1990 zone marked by the high of the 11th of March here, because again, you can see that yes, it did provide a good resistance, but if that gets cleared, yes, it may open the door towards higher levels. However, we do have the EMAs here, which could still provide resistance and kind of, let's say, could halt the acceleration. So that's why my kind of the more comfortable level for the upside is from this 1.2023 zone. Or you can keep an eye, of course, in that psychological 120 zone as well. So if you like that, because again, a nice good pop above it may open it, may also, it depends, of course, where we're going to be, but it might also place the rate above the EMAs already. But again, for now, it's not there. I mean, it's not really, the EMAs are still above that 1.20 zone, so that's why I'm still sticking to this 1.2023 zone. For the downside, well, again, if you want to go slowly lower, you could keep an eye on these levels, the 1.1910, a break below this, of course, yep, could open the door towards that 200-day EMA. But again, be very careful here. Like I said, it might even not travel to this 200-day EMA. It might even reverse somewhere earlier. Something like that could happen as well, but again, we're just going from what we see right now, so that's why yes, if we get a drop below this 1.1910 zone, then of course this increases the chances for a test of this 200-day EMA. So be careful with that one, guys. We be careful with this pair. It's not at the, let's say, the most clear place right now. I mean, it's not the clearest setup, but again, we're trying to squeeze something out of this one, but again, let's see if we can manage to do that. So guys, that's it for this session. I hope you found it useful, and once again, I do apologize if there are any technical issues or any, let's say, quality issues with the video, because like I said, I'm not really doing this video from my usual spot, but hopefully everything can get back to normal soon. Please bear with me. But yeah, guys, thank you very much for joining in and watching this one till the end. I really appreciate your likes, so really do. If you want to catch my video later on, my traders tea time is always 13:30 GMT. For now, have a wonderful day, stay safe, and I'll see you later. Thank you very much, and bye-bye.